Markets are closing the month and setting the tone for the next big move. Welcome to Daily Market Waves by Investing Angles, where every candle speaks, every Elliott Wave whispers, and we chart the turn before the herd even blinks. Today's lineup is packed. Volatility, the monthly and daily closure are speaking. Are you buckled in? Dollar, a fresh set of bullish signals. We've been waiting for this. Bond yields, bottoming signs everywhere. TLT's move, a technical tragedy from an Elliott Wave lens. Canadians, you heard it yesterday, that's monthly closure matters. Oil, bearish playbook still holding. Natural gas, mixed signals, stick safe or slow fade. Uranium, that's how bullish monthly candles look. Gold, a MACD cross not seen since 1980s. Ignore at your own risk. SP 500, a multi-angle breakdown, sectors, large caps, and what the candles really say. And a special feature, Blackrock, bouncing or just posing. A huge thank you to our 21,000 subscribers. You are powering the growth. And a quick note, this is the last daily market waves available immediately to the public. Starting tomorrow, daily episodes will release to members first and only reach the public 3+ days later. Weekly digests at least 7 days later. Early subscription is open now via the join button. The official launch is May 1st. Now's the time to stay in sync. Let's dive into the charts, and as always, we begin with volatility. The volatility index. It was an epic closure today. What we are seeing, this is the index, and side by side the futures. Index formed a very strong bullish inverted hammer, and most likely this is also a Harami candle for the previous one. And the futures are even stronger. This is a bullish engulfing. I think that the last time we seen bullish engulfing, it was quite a while on the future side, on the daily frame. Let's see what the bigger frames are telling us. So on the 2-day frame, we are seeing a potential bullish formation, which is called a ladder bottom, and a Harami, bullish Harami on the 2-day frame. Speaking about the bigger one, this is the 2 months closure we were talking about yesterday. In order to keep it bearish, volatility needed to drop below 22.80. However, it didn't, and right now the 2 months frame is setting with a bullish candle, and this is a very strong one. And another one I'd like to talk about is the volatility index and its 2 months frame from the perspective of an 8x20 EMA bullish cross. So this is what happened just right in front of our eyes, and this cross is now recorded. So the last time this cross happened here, previous one was here, and another one was here. So technically it's just to say this was year, the first happened 2015, then it was 2019 and 2022. So after that we'll see very strong moves upward, something that we would be expecting for volatility. So buckle in and get ready. And specifically from the perspective of Elliott Waves that we've been tracking for a while, I think for at least 2 weeks. Yes, this is when we first proposed this chart. And so far the move down has been corrective, and most likely this was an ending diagonal here. So if this is the case, we should see a very strong move upward. So this is the potential targets between 55 and 75. However, if it moves towards 89, I wouldn't be surprised at all. Well, that's the perspective for volatility, and this is the monthly closure. Now let's move on to the dollar index and see what the greenback is about to say through its candles. So it still has 1 hour 30 minutes till the closure, and the daily candles are definitely bullish. However, I'd like to see it stronger for a clean reversal. But if we look at the 2-day frame, it's a very very bullish candle here, and that's an inside up, and most likely it is going to close like this. So we have two bullish signals on the daily and the 2-day frames. Let's see if they form something significant. And if you remember our discussion yesterday, dollar indeed formed a MACD bullish cross, and I think this was a record magnitude since 2002, if I remember correctly. And the monthly frame, it closed with the bearish candle, and I think there is still a chance to move lower. However, let's see how it starts the next months. That could be a different story. So if we look at the bigger frame, so far dollar has some room here to form a more clear bearish flag, a bullish flag here, and if it hits this line, then we would be looking for a move upward. So one more lower low is possible, and the same if we look at the daily frame, a 2-day frame. This is this short-term chart, potential bullish flag that is being complete. So the ideal area for the target 98.3, 96.0. So it still has a chance to move slightly lower here and form a bottom. Well, that's the perspective for the dollar. Now let's move on to the bond market and let's listen to the candles there. First of all, Canadians, I warned you yesterday, so this is the 5-year government bond yield closed with a bullish engulfing, clean bullish engulfing on the monthly frame. So last time it happened here. It was in August 2020, and after that you can see what happened. Well, whether it's gonna happen the same rally or bigger or smaller, we'll see how it develops. But so far this moment could be very significant. Now let's move on to the US market. So today it was an attempt to form a bottom, at least on the long-term yields, like 20 and 30 years. They formed piercing line candles, which are bullish, and 10-year formed a potential morning star doji. Let's see what it develops. So far, the 2 and 5-year, they are bearish, and it would be interesting to watch how they develop in the next couple of days or even weeks. All right, so now let's move on to the bigger frame. So this is 10-year yield. So we discussed already daily. The weekly so far is looking bullish. So we will have 3 weeks if they don't surpass, they don't close below the low of this green candle. This formation will be bullish, potentially rising 3 methods. And the monthly closure today was kind of neutral, potentially bullish. So this high leg doji might be bullish if it has a very significant bullish support next month. However, we need to wait for another month to see the results. If we look at the 20-year yield short-term frame, this is something that I've been discussing for a while. Potentially, there is a closure of an ending diagonal, and if we see a very strong move higher and particularly signals on the weekly frame this Friday, it could be a reversal here on the diagonal. Now let's move on to the TLT, and there is a very significant move that TLT made today. So this tiny overlap, it practically invalidated in impulsive wave 3, and now I can remove this particular count, the red count, because it wouldn't make sense. Wave 3 cannot be a diagonal because of this overlap. However, it can still be a bigger diagonal here, so like something like this, for example, and we might see a move higher before before it reverses. However, the purple count right now remains primary, and I would be expecting a move lower. And let's listen to what candles are saying, whether they support it or not. So the daily candle formed a bearish harami, a very clean one, just within the body of the previous candle, and very good chance, very strong chance for tomorrow or the day after we will see a confirmation and the reversal. The weekly frame remains bearish so far, as long as this green candle doesn't close above the high of the red candle, which would be a very critical and very tough task for the remaining 2 days. The monthly frame closed as expected with a bearish candle. Most likely it's a bearish continuation, and we'll be looking for a move lower in the next months or a few. All right, so that's been discussion on the bond market. Now let's move on to commodities section, and we start with oil. All right, so if we look at the oil closure today, it was practically devastating. The daily candles formed 3 black crows, and either an immediate move down or a little bounce and the continued move down are on the cards. And just to make things worse, a very fresh MACD bearish cross for the daily frame. 2-day frame, clear bearish continuation. The monthly frame, bearish continuation, and the 2-month frame, also bearish continuation candle. Nothing bullish here. Now let's have a look at the charts. So this is the Elliott Wave chart that we discussed a while back. This was the initial one on April 18th, when we said that oil is forming an ending diagonal. So the ending diagonal was complete here, and this was our technical call on the wave 1 and 2 completed, saying that 58.41 will be the next target, then potential this rectangle and the red one. So far, oil is falling, and it's already lost 9% after our call last Friday. Well, and this target already completed. Now we are moving towards the next one. So, and based on the agility of this wave, I'm looking at it at wave 3. So if we just look back to our previous assessments here, so some people question, so how far our oil history goes, and I would like to say this is just a little look back into the history. So our very first big call on oil was in June 2022, when we called a potential. This was our call, initial call, when everyone expected oil to rally towards 150, and we said that no, this is an ending diagonal and this is going to resolve downward. 93, 97, 80, these were the targets. So just a few months later, this is what happened with oil. On August 1st, we said that oil formed a double top, and our next target would be 65. Again, nobody believed, but nevertheless, oil did what technicals say. It dropped here towards 65, and after that we said that it would be a little rally, and on September 2023 we said that this is probably gonna be the path for oil. Note that the date of this chart, October 7th, 2023. Right now we are talking about April and April 2025. So far oil moved nicely within this rectangle. It hit this 65 mark here, and now it looks like it is moving lower. So the next, our target was 34, and we discussed it back in 2023. So let's see whether it follows the map or not. Anyway, the most part of it is quite amazing. Now let's move on to the next chart, and this is the technical side, technical call, statistical call on the MACD cross on the 4 months frame, which happened today as we speak. Our statistical estimate is between 50 and 30, which kind of aligns with the call that we made almost 2 years ago. Well, that's the technical, and now let's move on to another perspective. This is Brent chart, long-term chart that we first published in May 2024. Since then, Brent technically followed it. It was up and down, but nevertheless, since the call, Brent lost 25%, and our targets remain absolutely the same. We are not changing anything. There was no event that would shake our prediction. So this is another technical call, on alert on January 18th. We were saying for Brent that it's going to fall sharply here, and since then it lost 24%. And it's interesting that this week is still ongoing, and I'd like to say that there is a possibility that Brent oil is repeating this particular pattern that it did in 2020. And I remember this is for the 30% loss in 1 week in March, from March 2nd to March 6th. Well, there are still 2 days to go in this week. Let's see how it does. So far, Brent lost about 9% only in this week. Now let's move on to the next one, and this is big oil companies. So today we have a very disappointing move by Exxon, a very strong bearish candle, potentially forming a big bottom or big top here, and the monthly closure was also very bearish. No surprises here. A strong bearish engulfing. The same happened for Chevron and for ConocoPhillips. Conoco did much stronger move. It formed 3 black crowds on the 4 months frame, which is very significant. And I would say that based on a few statistical estimates, it would be surprising if ConocoPhillips loses about 65% of its value of the most recent top. So the price would be somewhere here about $47-50 per share. Well, and speaking about Conoco, this is the chart that we shared way back in January, saying that the company has a very good chance for moving lower, and this would be our particular target for the wave down. So far, Conoco is following the path, and it is almost hit the upper boundary of this target. However, it looks like it is going to move much lower. Well, just keep these charts in mind. So oil industry seems to be aligned well among themselves. Now let's move on to the next commodity, and this is natural gas. So far, there is a mixed signal. There are mixed signals here. So we have a very strong initial bullish move, and technically this red candle didn't make any change here. This is an incomplete dark cloud cover, which is viewed as a bullish continuation candle, which is normal after a move like this. The 3-day frame is not closing today, but if we look at the weekly formation, the weekly has a very good chance to form a bullish kicking combo, and especially if it closes a little higher, well, and it would be a strong reversal here. The monthly is formed the bearish engulfing. However, I would say it's not very strong, and I would be looking for confirmation for it because it's still sitting about the 200 months moving average. And we will be discussing bigger frames and bigger targets in our weekly report over the weekend for natural gas. If we look at the chart, Elliott Wave chart remains the same three potential counts. I would say that either red or green are having priority right now. The blue one is still on the table, but I'm not expecting it to be completed. Well, and the final one, this is potentially a very strong bullish flag here that natural gas futures completed, potentially with an ending diagonal. So if this is the case, then we should see a move higher towards 436 or even higher. Again, we will be discussing this particular formation and the possible targets in our daily and weekly reports. Now let's move on to the next commodity, and this is uranium. I think uranium investors could rejoice today because the monthly candle was amazingly strong, bullish engulfing, and I think uranium opens a path higher. And the daily closed with a very strong piercing line here, and on the 2-day frame it's not closed yet. Tomorrow we'll be closing it, but if it forms a bullish engulfing, it would be an even stronger elevation of bullish odds. So the weekly frame is so far neutral. Let's see how the momentum builds on the daily and 2-day frames, and we will see a weekly closure on Friday. But the main thing is that the monthly closed with a bullish engulfing. It's rather rare and would be more powerful. Speaking about the long-term chart, so this is today. Last time I touched it on April 26th. Today is April 30th, so there is a potential. So this is the history, first of all. So we had this chart completed first on December 2023, when we said that Energy Fuels had a 2023, December 19, 2023. This is the time of the call. We said that this would be the target, and ideally, I think the target was hit ideally in the middle. Right now, it is building a move higher, and practically this could be an expanding ending diagonal. If it is so, if this hypothesis is confirmed, then we should see a very strong move towards $9. That's the perspective on the long term, and the short term, this looks like a very strong impulsive wave of the bottom. And now if we see a wave 2 slightly move, oh, I think it is already completed here. So this is because this wave, so wave 2 in red count is invalidated. Yes, and this was, I would consider this as an ABC formation. So this is potentially wave 2, and the wave 3 potentially started. Well, that's we'll measure it. Let's see the confirmation on the weekly frame, and then we'll discuss the next move higher. Well, that's all about uranium. Now let's move on to gold. As we discussed a few days ago, gold indeed formed a very strong and rare bearish MACD cross on the daily frame. So I'd like to emphasize that this cross is of a record magnitude, never higher, and the second highest cross happened in 1980s, and after that gold experienced a huge decline. So if you're interested, you can watch our weekly video, and I think the next one we discuss this cross and the potential implications. Well, for the weekly frame, which is still developing, so far there is a chance to forming a spinning top and confirming it. For the daily frame is confirmed, but now we would be looking for the 2-day frame closure. So far it's not going to confirm it. We might need to wait for another day or two. Let's see how it closes, how gold closes on the weekly frame. So this is another chart of that cross, MACD cross, and let's going to skip it. So this is an Elliott wave. Gold possibly formed an impulsive wave off the top, which it hit on April 21st, and now it is potentially moving, forming a bigger flag. So something like this. If it makes another wave higher here, I would consider it as a wave B, and or potentially alternative wave 2. However, wave 2 could also be here. So far, this wave down has been impulsive. Wave 2, potential zigzag, and now wave 3 might be starting. Let's see how it develops in the next couple of days. So far, on the daily and the small frame, gold is turning bearish. And this is the GOD. This is the GOD chart. Today, GOD formed a very dangerous candles, I would say. So it didn't confirm a reversal yet, but it didn't negate the bearish formation either. So if we see, for example, a significant gap tomorrow, we might consider this as a bigger island, bearish island. And after these number of gaps, it would be absolutely normal. Speaking about the 5-day frame, we know the criteria, we know the levels to watch. About the monthly frame, quite a few things I would like to talk about here. So first of all, this GOD has been extremely overbought. And if we look at the RSI, monthly RSI, for example, so this particular technical condition places it in together with the conditions in July 2020 or August 2011 or February 2008. So what we can see here is that there were significant moves down. So for example, after hitting this high, which is approximately at the same level that GOD is right now, there was a 34% loss. After in 2011, it was even more significant. Gold lost about 45%, and in 2020, GOD losses were about 22% of the top. So if we look at something right now, let's say we will be talking about average, right? So 21, 46, 34, that's roughly about 30%, 30-35% loss on average would be. If we consider this one, we would be looking for something like this, and the target would be somewhere here, about $200. So maybe that 50 months moving average would serve as a support line in this move. And this move could take a couple of months or maybe a couple of years. We don't know this yet. We'll see how it develops. So far, this overbought is extremely dangerous. And I think that the same it will be applied to gold in general. Well, now let's move on to the stock market, and we will discuss S&P 500 as usual. So today's closure, there were green candles, and the closure was positive. However, I'd like to mention that the candles weren't able to close at the higher high, and this is the concerning development, especially if we look at the futures. For example, futures are even more concerning. So S&P 500, Nasdaq formed neutral dojis technically, and the same happened for Dow Jones, and Russell made a very strong move. This is a dark cloud cover on the daily frame, and there is a potential for a very strong reversal. Let's see if it is confirmed tomorrow. So tomorrow could be a very surprising day, especially if you remember what happened with volatility. Now let's have a look at the monthly closure. No surprises here. All candles formed bearish continuation candle. So Nasdaq, triple Q, the candle technically green, but from the candle's perspective, it is viewed as a thrusting line, and it is a bearish, most likely a bearish continuation candle. Dow Jones and Russell were able to close at a new lower lows. SPY is neutral bearish, and it's broken below the 8 months EMA, which is a very strong support, used to be support line. Speaking about technicals, we already discussed this multiple times. So these are MACD crosses on the monthly frame, fairly rare, and of these ones are of the record magnitude. So the chances for a continued move lower are significant, and these I would say that these bear markets for the indices would be quite lengthy. Now let's have a look at the Elliott Wave chart. So the one that we started discussing in April 22nd, saying that it has a very good chance to move toward these targets. So far, the targets are hit, but I'm still looking for a move slightly higher. It would be an ideal. However, it's already perfect in the target area. So I would consider this wave C of either wave B or wave A of a bigger correction here. And if we look at the short-term frame, this is the potential diagonal that we discussed yesterday. And yeah, as I suspected, there will be one more higher high. So this was most likely wave 2, 3, 4, and now we are looking for wave 5. So this limit needs to be recalculated. I'm removing it for now. So wave 5, and just adjust this one. So looking from Elliott Wave perspective, so this is an expanding ending diagonal potentially. So this would be wave 5, and ideally wave 5 should move, should spike above the upper boundary of the diagonal, and after that we will see a sharp move lower. So far, this is the perspective. Now let's have a look at the sectors. So all sectors technically are bullish on the daily frame, and there is a very good chance we might see a higher high. However, I would like to say, oh, by the way, energy sector is deeply bearish, and this build-up of green candle within the red candle range wasn't just for a cause. So this was a very reasonable move after that. So utility is formed. Utility formed a bearish candle here, and the other ones looking bullish. So I would say that there is a good chance we see higher prices. However, now if we look at the monthly closures, for example, for the financial, so this is technically bearish, and technology, I think it's bearish either. Yes, so this is a thrusting line, and while it's still keeping above the major support line, so the chances for a continued move lower are significant. Let's have a look at the bigger, at the 2 months. Okay, so 2 months frame is clearly bearish, and this is not just a bearish continuation, it's a confirmation of of a reversal on this frame. So this is very dangerous. And for the financial, I think, no, financial actually it's in a better shape, I would say, compared to the technology sector, because this is just a dark cloud cover and it's yet to be confirmed. But this technology has already confirmed the reversal here. If we look at the industrial from the same perspective, this is a neutral, bearish neutral doji. For the monthly frame, on the 2 months frame, it's a bearish engulfing. So get ready for lower prices for industrials in the next 2 months. And these three sectors are very significant, and I think that they will be providing guidance for the entire market for the next 2-4 months. Now let's have a look at the biggest stocks, large caps. So I'd like to say that Microsoft formed a piercing line. This is on the monthly frame. This is technically a bullish candle, and we might see higher prices for Microsoft. However, if we look at the 2 months frame, and especially the 4 months frame, this is a huge bearish engulfing here. And even though we might see higher prices for Microsoft in the next months or even 2, the chances that it will seek lower prices in the next 2-4 months are significant. Amazon formed a very strong top on the 2 months frame. The same happened for Apple. Nvidia, this is the monthly frame, a neutral candle, but for the 2 months frame, it's technically a confirmation of a reversal. And I think for Meta is the same. This is on the monthly frame, it's bearish. On the 2 months frame, it's a strong bearish engulfing. And Google also formed a top on the 2 months frame. So I would like to say that the picture is rather gloomy for large caps, and the next 2-4 months are expected to be bearish. Ups and downs, obviously, but in general, direction will be bearish. Tesla right now is neutral, and on the monthly frame, most likely it might even see higher prices, but we need to evaluate it, and I think I will post a special report on Tesla. Berkshire Hathaway, it's formed an advanced block on the monthly frame. So technically this doji hanging man is very vulnerable candle. If we see a monthly, a very tiny bearish engulfing on the monthly frame next month, we would be looking for a reversal here. However, this is very sticky, and it might go into a horizontal development rather than moving downwards. So I would be very cautious about this stock. Now let's talk about Nasdaq. As usual, we will have a look at the Elliott Wave and see whether it is aligned with what we are seeing for S&P 500. So far, it is slowly pushing towards the target that I discussed earlier this week. And the wave here, unfortunately, is not an impulsive wave. Most likely it is forming a diagonal, somewhat similar to what S&P 500 did. So if this if we see it hits the target and the reversal here, and particularly the candle would be supporting, and the technicals, I'm talking about MACD crosses across all indices. Now this is about Nasdaq. Now let's talk about the feature of the day, and I would like to discuss Blackrock. So for example, let's start with the candles. First of all, I would like to say that this formation, candle formation for Blackrock on the daily frame, it's very dangerous. We have a strong MACD, strong 50 over 200 days moving average bearish cross, and now all the candles are sitting below the 50 days moving average. and the last 5 days were not able even to surpass the high of the red candle. So I would be looking for a reversal downward. This would be the most preferable path. On the monthly frame, BlackRock closed with a bearish candle, bearish continuation. And if we look at the bigger picture here, slightly bigger, I would say that BlackRock is on track to forming a MACD bearish cross on the monthly frame, and that could happen the first thing tomorrow morning. And this cross would be the third highest in the magnitude, and the previous two were causing BlackRock to lose about 48% and 44%. If we took an average between these two, let's say 46, right? So then we would be looking for this particular targets somewhere here, and the price would be about 600. Well, that would be the perspective for BlackRock. Just a quick statistical estimate based on MACD. Now let's move on to the next chart, and this is our call on February 12th. This is what we said, that BlackRock, when it was sitting at 973, it had a chance to move towards 814 and lose quite a bit. So we were laughed at, and it's normal. But nevertheless, who is laughing now? This is the candle perspective. This is the double top that BlackRock moved and formed, and now it moved even lower towards 774, and this was the move of 28% of the top for BlackRock. Right now it looks like it is recovering, but nevertheless, let's see what the next charts are telling us. And now I like to move on to this one. This is our call on BlackRock in May, practically 1 year ago, when BlackRock was 797. We said it's going to move towards this target, and after that it will decline towards, will make wave 4, potentially making wave 5. Now I think after recent move, last week move, BlackRock seriously changed the plans here. So if we consider this as wave 4, so it's not gonna fly, because wave 1 and 4 now overlapped, and the best case scenario here would be just a diagonal. We might see, yeah, this is the potential for BlackRock, but it is not decided yet, so we need to see. So if it goes higher, then it's going to be only as an ending diagonal, and once this ending diagonal complete, we know what to expect. This would be a move towards $500 per share, because diagonals tend to resolve towards its origin. Well, that's the perspective, but let's have a look at this chart and try to make it together. So this was the most recent top, and I'm not seeing an impulse here. The only thing, there are two possibilities. I would say this one possibility is WXY, and another one, it could be a leading diagonal, potentially leading diagonal here. If this is the case, and now we are seeing that the wave upward here is corrective, I would say that in both case scenario, this would be wave A. So this would be wave A, either in blue count or red count, and now we would be looking for wave B of a larger correction, and this wave B would take a shape, could take a shape of a zigzag, for example, or some other, or a flat, I would say. So let's keep it as zigzag for now. Let's see how it develops. The main message here is that this wave has been corrective, and we would be looking for either a bigger correction here or an immediate move downward. So this would be either something like this. This would be an immediate pass for wave C, and this would be another path for once the correction is complete, and we would be looking for wave C. So this is the perspective. And if we look at the longer term chart that we discussed earlier in March, so far it is keeping everything intact. And I was expecting a move towards these levels, 670, 540. And it would depend on what type of wave it is. So I am considering this is a cycle wave 1, and this will be wave 2. Well, that's the perspective for Blackrock. And the most critical thing I'd like to remind that this wave upward has been corrective, and this would be a critical piece of knowledge for developing the next wave. Well, that's been all for today, and I'd like to conclude. The charts just closed one chapter and opened another. Volatility may look calm, but the monthly print tells a different story, a totally different story. Dollar just aligned with the bullish playbook, decades in the making. Bond yields hint at the bottom, while TLT's pattern screams caution. Oil and natural gas send conflicting signals. Stay sharp. Uranium bulls got the candle they were waiting for. Gold's MACD cross could echo 45-old move. SP500, its sectors and large caps just dropped key clues. Blackrock's candle, the jury's still out. Markets are shifting, and now more than ever, timing is everything. If this session added value to your strategy, like, subscribe, and share it with your investing communities. Drop your favorite ticker or sector in the comments. We want to hear from you. And don't forget, starting tomorrow, daily market waves and weekly digests go behind the early access window. Hit the join button now to secure early access. Official launch is May 1st, which is tomorrow. At Investing Angles, we don't follow, we forecast. Stay sharp, stay objective, and as always, we chart the turn before the herd even blinks.